there, traders. Welcome back to today's How to Trade Stocks Options podcast. Today we have a special guest on the line, Chris Vermeulen. I'm very excited. He's the Chief Market Strategist from the Technical Traders. And Chris, thank you so much for coming on the line today. We've got a lot to talk about.
This is the How to Trade Stocks and Options podcast brought to you by 10MinuteStockTrader.com, where we give you the tools, tips, and tricks to help you trade faster and trade smarter. And here's your host, voted one of the top 100 people in finance by Redwood Media Group, founder and head trader of 10MinuteStockTrader.com, Christopher Uhl. The How to Trade Stocks and Options podcast is produced in partnership with my friends at FinClub.ai. I use the artificial intelligence data from FinClub as my primary indicator. I don't even take a trade if FinClub doesn't show me that I have a greater edge than any other traders in the market. You've heard the stats, 90% of traders fail, which is why you need to find an edge, and FinClub has that edge for you for just a few dollars a day. The returns produced by FinClub have been shown to be more than double that of the market, with win rates as high as 90%. I mean, they basically make it so easy. They're going to show you exactly what stock is going to exactly what price. Basically, they're handing everything you need to you on a silver platter. Listen, they are so confident that this will change the way you trade. FinClub.ai is going to give you 2 full weeks to test drive their service, and they'll even give you all their historical results so you can see exactly how it works and how it can dramatically change the way you trade. And that's exactly what I've done. So head on over to FinClub.ai to start your free 2-week trial, and I'll even throw in some extra bonuses after you sign up. Now, the only place you can get your discounts and free bonuses is at FinClub.ai. That's FinClub.ai.
Yeah, well, thanks for having me on the show.
Yeah, for sure. So Chris, coming from the Technical Traders, he was talking to me about natural gas and gold and oil, and I know that those markets have been just all over the place lately. So Chris, give us a little bit of background about who you are, and then we can get into these topics here.
Sure. Yeah. Well, my background's pretty much trading. I mean, I've always wanted to trade. In college, I started trading, and that's where I kind of really learned the art and got my feet wet. And I've been trading since more or less I was 16. In high school, I started, and so then I started trading full time in college. And here I am 23 years later, and I'm full-time trader. I've been running a newsletter since 2001, so I've been doing it quite a while, and I'm 100% chartist. I don't care about news, fundamentals, economic data. I mean, you got to be careful trading around them, but I mean, other than that, I mean, I live and breathe the charts, and I love swing trading and getting into the momentum trading, kind of intraday type of moves that carry on. So, I mean, my specialty is the major markets. So the SP 500, NASDAQ, gold, oil, silver, and the miners. Those are kind of the main ones that I really cover, and natural gas. I don't get into the individual stocks. I like to ride the tide, and you can put more money in an index or sector versus a bunch of individual stocks. So my mentality is do the least amount of trades, ride the tides, and stick with the trends. And it's all about position and money management. And so I just carry that philosophy forward.
Oh man, that the way you're describing is exactly how I like to trade as well. There was a point in my time where I was trading where I wanted to pick tops and bottoms. And in fact, that was a story I was going to share with you. It was on the gold miners, and listeners of the podcast would know this. It's my worst trade ever of all time. And I had gotten the idea that gold was going to go up, and this was probably 2016, 2017. 2016 or 2017, when gold it was in the summer, and it was just falling like every single day, down 10, down 20, down 30 every day. And I'm like, no, this is the bottom for no reason whatsoever. And like I held it and I held it and I held it and I held it, and it just kept going down and down, and it never came back up for like 3 or 4 months after that. And I mean, I lost so much money on the trade that I pretty much blew out my account, and it was by far the worst thing I ever did was trying to pick the bottom when there was a clear downtrend. Hello. Yeah. Just go the other way of the trade here, stupid, and you would have been just fine. So, man, I have a sordid history with the miners there. Which ones do you like to trade?
Well, I mean, I focus on the basket, so GDX GDXJ. Mm-hmm. Right now, GDX, we can talk about it. I mean, it's to me the most exciting sector right now.
Oh yeah,
because it's breaking out. Last week or this week, it's starting to break out on the charts, on the weekly chart, out of a multi-year basing formation. Gold broke out last year. When something enters a new bull market, it usually rips to the upside for weeks on end. And the GDX, the large cap gold miners, are breaking out right now. And if they can hold this breakout, they're the next hot sector. And it bodes well with where we are in the overall economic and stock market cycle, which is we are late bull market, early bear market potentially. This is when gold, silver miners should outperform and start to actually really take the lead. So the fact that those are breaking out is a really leading indicator that, you know, people are really concerned. We're at that late stages of a bull market or the very beginning of a bear market, which is how I feel we are. And so they got a lot of potential. So I do the basket. I don't look at Newmont or all those other companies. I focus on the overall tide of that sector, and I try to ride that.
Mm-hmm. Yeah, I was trading GDX about 2 months ago, and I mean, it was doing okay then. But what to you is telling you that it's more ready to break out now than maybe previously in the past?
Well, it's pretty much a line across the chart. I mean, if you were to look at a weekly chart and go back to 2010, 2011, whatever, you'll actually see there's a series of major rallies from back then. One in 2016 when it tested that level. It tested it 3 weeks in a row and got rejected. It came back and tested it back in February, sold off huge. Here we are now, not only tested it, but we're actually holding above it. This is the second day above that line in the sand. And we're actually, you know, if you follow Stan Weinstein at all, he's got the stage analysis, which is what I kind of base a lot of my theory on, is you want to know what stage the market is in, a basing, stage 2 accumulation, a stage 3 topping phase, or a distribution phase, which is a bear market. And gold miners have just broken out of a stage 1 base. Oh, okay. So now we're going into that bull market phase, the markup phase. And I don't know how much legs it's going to have in terms of how long it's going to go on, because if the stock market enters a bear market, they're going to get pulled down just like they did in 08, 09. Eventually, though, when that bear market comes to an end, they should be the first sector to really start to rally and take off, and then they'll be off to the races. But I think they have the opportunity now to outperform for several weeks, do exceptionally well, but they might start to get under some pressure if the stock market does sell off.
Mm-hmm. Yeah, you were talking about the stages there, and I've had Mark Minervini on the podcast before, and he's a big believer in that. You read his books, and he's all about, you know, trying to catch those stage 2 breakouts. He's like, you know what, I don't care about anybody else who's not buying it. I only care about when other people are buying it. I'm going to jump in as well. So that makes a lot of sense. It's good to hear that from multiple sources, especially for the audience out there who may not be familiar with that, right? A lot of people call themselves contrarian traders, and I certainly felt that I was that way in the past, but it's so much easier to just find a trend that's going in one direction, either up or down, and participate along with it. Yeah,
for sure. I use the contrarian play all the time for stuff, but I mean, once something breaks into a new trend like the gold miners, I mean, this is a really critical week. They're at this breakout zone where they're going to be outperforming the rest of the market, which means not only are they technically in a bull market from any technical analyst, but financial advisors are going to start seeing, hey, this is the top performing sector. There's going to be window dressing every month going forward. These funds and advisors are going to want to move their people to the hottest sector so they don't look like they missed the boat. Because most of them do, right? They all buy into the hottest stock and sector at the end of the month, so that when their advisor or their clients see the money, they say, oh, I'm in that good stock. It had a great run this week, right? And so that's going to eventually happen. We're going to see money start piling into the gold miners, and it's going to be institutions and financial advisors calling up their clients saying, hey, here's the hot sector. It's breaking out. It's the number one hottest. And that's going to start the train. And right now it's still kind of a contrarian play. But as soon as that train leaves the station, I mean, we want everybody to pile in because we'll be in already, right? And all they're doing is just piling on the profits for us as they drive their prices higher. So that's what we want, is we want this train to leave and for it to hit mainstream media, and we want to see a big pop in that sector. And that's what I'm looking forward to. Gotcha.
Yeah. So do you trade options to that, or just the ETFs?
Just the ETFs, yeah. Okay. I used to trade options. I mean, when I started trading, my philosophy was I wanted to try the whole gauntlet of financial markets and see what my brain processed, what it liked, what I could make money in. And so I did currencies, I did options, I did Forex stuff. I mean, in terms of like CFD trading. I mean, I've done all kinds of different stuff. I did a lot of covered calls back in the last bull market. And I just kind of got out of it just because I'm not a huge fan of options. I like futures, ETFs and futures, because futures gives you that leverage and it's really liquid and fast moving. And so I don't do options now, but I've done them all, and it's just not my thing exactly. I wanted to find the simplest way to trade that I can share with others. Options gets complicated. It's timely. You get big spreads. It's harder for people to follow you and make money with you. And so I want something that's really simple for everyone to get in and trade the most liquid assets, the bond ETF, the SPY, big sector stuff. People can dump millions in, and it really doesn't move it.
Mm-hmm. And that makes a lot of sense. Being able to find something that you're comfortable with, and certainly would hope for that for the audience out there, is really to just try everything like you've done and I've done. And I actually love options. Like they're my go-to. And
right.
Everyone's different, right? It fits everyone's personality in a certain way. Totally. And that's a great thing about the market is you can experiment, right? It's not one product for every person.
Yeah, and it's crazy because, I mean, people get a little confused with my analysis sometimes because I'll be bullish on gold in one time frame, bearish on another, and then bullish again on another time frame, and they'll be like, I don't get it. I'm like, well, you got to look at the market with layers. Depending on which time frame, it totally changes. And I trade with a trader, and he'll be bullish on something, I'll be bearish. We'll both take a trade in our own direction, and we both make money because he just trades a bit of a different time frame. He trades a different asset, but we're still basing it around the same kind of asset class. And so traders, depending on your personality, your trading style, and your time frame, I mean, you can do opposite trades from each other and still both make money when that move is kind of done. It's really amazing. So it's not like there's one way to make money. I could give you a buy signal on the SP 500, and you could probably find 15 ways to trade it differently and still make money on them all. But I kind of dumb it down to the most basic, simple. Buy here, here's our stop, here's our target 1, target 2, and our runner. I mean, really simple stuff. And that's what I try and keep it to, the KISS strategy. Keep it simple, stupid.
Right, perfect. So tell me about natural gas. You were telling me before the show that you're pretty excited about this sector. This is not one that I've really looked at, in years. I played UNG, I don't know, it's probably 2018 is the last time I even looked at it. What's going on with natural gas?
Yeah, natural gas is one of those commodities that it's really tough to trade because of the crappy ETFs based around it. They've got contango. I mean, there's lots of strategies to make money from that, but I don't get involved with the contango. But natural gas itself is set up really nice. If you were to look at the daily chart and zoom out several months, you'd see like a beautiful bottoming formation. It's a rounding bottoming formation. And now we're at this point with higher lows and higher highs. It's forming more or less like a cup and handle pattern. It's a really nice looking chart. And the volatility is still really high. We're seeing it move 4-7% a day, which is really high for my trading strategy. I like really slow moving stuff, and because it's just more stable. If it's volatile, then I take a much smaller position size. But natural gas is primed and ready to break out, and I think it's got a very easy 25-35% move from here in price. And hopefully it's going to break out over the next 1 to 3 weeks. I'm kind of letting it just flag out and kind of consolidate, hoping the daily volatility is just going to narrow and kind of tighten and build up more energy. The more something trades sideways, the longer it goes sideways, the bigger the potential pop when it happens. So we're just kind of letting volatility fade a bit, build out this kind of basing formation a bit more. And then once our charts and our momentum say, hey, this is a time to step in, it looks like the volume, everything's starting to come into favor, we get in. And generally within 3 or 4 days, we see a pop and take off. And it's just kind of a timing game. But natural gas is known as the widowmaker. It moves fast.
Yes.
It can be deadly. It's got to be small positions. And you just got to be on your toes for it. And as long as you take really small positions, that counters the volatility.
Right. Now, has natural gas been depressed like oil has been lately, or is it just moving its own way?
It has been. It's depressed. It's at maybe even all-time lows, to be honest. I think it might have just came off them. You really never hear about it. But it's terrible. It's been under pressure for years. It just keeps going lower and lower and lower. And I mean, it's at a point now where it looks like it's ready for a really significant move. We got two of these moves last year. Both of them are about 40% to the upside. Exact same basing formation pattern form, which is why I'm excited. I mean, this is round 3 on it. So it's got a lot of upside. It's way overdone to the downside. I mean, it's just an ultimate bear market. And on a swing trading standpoint, on a daily chart, I mean, this is the first real good setup in months and months and months, and it's just been going lower and lower. So this could have a lot of power.
So you're not going to sell any naked calls on that, are you? Like
no.
that fund that blew out last year? Man, I watched the video of him apologizing, and I'm like, oh, wow, how could you? Yeah, that scares me. Like when I trade options, everything's a spread. I never trade naked just because that's my personality. Like we were talking about earlier, finding trades that fit your personality. And you know, when you have that unlimited risk, it's just like there is no good reason to do that. When you could see, like you were talking about there, potentially a huge spike in volatility coming, and then oof. So now with natural gas, looking at coupled handle. In fact, when you were describing that, I don't know if the audience was really paying attention. I definitely recommend re-listening to this podcast because what Chris was quoting there, it was almost like he's taken a textbook on how to trade, like maybe Bill O'Neill's How to Make Money in Stocks or something like that. And he's like, this is how you do it. You look for the cup with handles. You look for volatility contraction patterns, as Mark Minervini would describe it. And then you get the bump to the upside, and then it goes from there. So, yeah, I was really digging that right there because I definitely knew exactly what you were talking about. So now with oil. I heard that it's better than free at this point. Is that still the case?
I know it's confusing. I mean, oil isn't worthless. It's less than worthless. I mean, it was just crazy what we saw in the market, and it really blew my mind. I mean, I was watching it. Oil hit $11 a barrel on my continuous contract chart, and it hit our target. We were expecting it to hit that level this week. And then, so I started doing a screen share for my clients, and I'm sending it out. I'm like, you guys got to see this. It's hitting our target. It's in free fall mode. We just have to let it wash out. And, you know, this is a major multi-year low. And then I see it, and I send it all out to the members. And then I look back at the chart. I'm like, what the heck? It's at $3. It's at $1. It's at 16 cents. And then it goes negative. And I'm like, I don't know if my data's right. So like I panicked and I wrote everybody back. I'm like, ignore the video, that analysis. I don't know what oil's doing anymore. I think my data is off. So step back. We never traded it. It was never a trade. It was just, you got to look at this price action type of thing. I don't want to trade anything doing this type of thing, right? But I mean, I had to retract everything because I didn't even know futures could go negative. I think a lot of people didn't know that. And I still don't really know what it means for it to expire minus 36 or 37. Does that mean if you just take 1,000 barrels off somebody, they're going to pay you $37,000 because it's or whatever that is, or 30? I mean, I don't get it. So when this was the learning lesson for members this week was when you don't know what the heck's going on, you got to just step back.
Yes, you don't want to be involved.
And you've got to just step away from it, because my natural instinct was I call up my friend. I go, oh my gosh, what do we do? How do we make money on this? And we've both been trading. He's been trading for 35 years. I'm 25 years. We're looking around. We're like, we don't know really what's happening. There is no safe way to trade it because the USO and the oil ETFs have a problem with contango, just like natural gas. So getting into those is actually really deadly, because even if oil goes up the next day, these ETFs can actually go down. And that's what happened. I told members, I said, don't touch an oil ETF. Everyone is piling in today. I can see it. Don't trade it, because tomorrow it could open down like 50 or 90%, even if oil doesn't go higher or rallies. And it did. Like USO spiked down 40% the next day, even though crude was up 20%. And it's just, that's how deadly trading commodities are with ETFs can be. And my natural instinct was, how do we make money on this?
Yeah.
And when two of us couldn't figure it out, we're like, holy crap, we better tell members, like, we don't even know how to do it, so don't even touch it, guys.
Yeah, absolutely. I couldn't agree with you any more than that. I mean, my first thought was, I don't even know what I was doing. I happened to have my phone open, and it was on Twitter, and it was like, oil is about to go to negative. And I was like, what? And so I keep scrolling and I'm like, oil's -3, oil's -6, oil's -30. It's like, what? How is this possible?
Yeah.
So yeah, what interesting times do we live in? Like, my wife could not care less about financial markets, and I was like, you will not believe what happened today.
Yeah, I know. Usually people always call me when something happens, and when crude oil broke zero, actually when it hit 11, I started calling people. When it broke zero, I'm calling even more people going like, what is going on here? Like, what data do you have? And I mean, it's so weird. Like, usually I don't have to call anyone to get insight on the markets, but when I'm calling people, there's a problem.
Yeah, for sure.
It's like, holy geez.
Well, Chris, this has been a great conversation. I've really enjoyed this. And like I said earlier, I do hope the audience goes back and listens to the wisdom that Chris has here. I mean, within like a 20-minute conversation, he dropped some major knowledge bombs on you. So I have really appreciated that, Chris. Thank you so much for going into all the detail. This has been a very great conversation.
Yeah, well, I mean, I love technical analysis. I mean, I'm a visual guy. And, I've read all the Bibles, like the John Murphy technical analysis and all those, 1,500-page books. So I know all that stuff. And it's amazing because you see it happen on the charts on every time frame. Could be the 1-minute chart, could be the weekly chart or monthly. And the patterns just unfold. And once you understand the intermarket analysis, when something's doing something out of the norm, you can usually find an opportunity, what it means, and find a pattern somewhere to trade it. And I mean, technical analysis is great. You don't have to rely on news or earnings and all that stuff. So if you want some good technical analysis on something, I mean, I love to talk it because it's just always interesting. And
yeah, so people can learn more about you at thetechnicaltraders.com. Is that correct?
Yeah.
Okay, perfect. And then do you have a social media handle where people can reach out?
Yeah, Twitter at the Tech Traders.
Okay.
And I think it's the Technical Traders on Facebook.
Okay, perfect.
Yeah.
Well, Chris, this has been really wonderful, and I definitely hope that everybody will go and check out Chris at the technicaltraders.com there. I really want to have you back on very soon. This has been great.
Yeah. I'd love to dig in and figure out how you do some of your option stuff, because I know you're heavy into the options. Yeah. And I mean, I haven't traded them in years, and now a lot of our subscribers always talk about options, and they're like, "Hey, what's the option play for this?" And I haven't traded them in years, so I was looking at them and I follow them, but I mean, I know you've got some great strategies on how to do it, so I'm excited to kind of open it up. And I started getting back into a little more day trading with this volatility, because I mean, it's almost free money if you know how to day trade, especially the indexes and these moves. And so it's really opened my eyes again. I'm like, well, maybe I should expand a bit and get outside just my ETF swing trading. I can get back into some day trading and do the options, just because it really is. This is kind of the market for day trading. I'd like to get your take on the options side of things. Like, this volatility probably adds more risk in terms of premiums on the options. I would almost think it's harder to trade them right now than normal.
What I've done, and I've had a lot of success in April. April's been my best month ever, and by multiple times. And I've nearly doubled my account just in April. It's been fantastic. And I'm not one to brag about numbers or anything like that. That's not my personality. But the way that I trade, I trade super simple. I mean, basically, I look at a 65-minute chart. And if it's in a nice trend, right, you've got moving average crossed over. I don't really try and complicate it with much more than that. Moving averages crossed over, and then RSI keeping between 30 and 70, and then having some confirmation on the daily chart, like you were talking about earlier, having multiple time frames, right? Is the daily chart in an uptrend, and is the 65-minute chart in an uptrend? And then I confirm that just my entry point with a 12-minute, right? Because a 65-minute divided by 5, I think, comes around 13 minutes or something like that. And then I just make sure that my entry point on the 12-minute is, let's say, bullish. My entry point on the hourly chart is bullish, and my entry point on the daily chart is bullish. And then I'll throw a spread on. And as long as the market continues to trend, I'm in and out of these trades within one day, and it's been like clockwork. It's been really fantastic.
So the big gold nugget there. I mean, this is what I love talking about traders, because to me, the thing that shines out of that data is you're trading the 65-minute, and then you're breaking it down to a 13-minute moving average, or what you just commented there. And to me, that is a huge gold nugget, because it's these odd time frames that no one else sees these same patterns. That the odd time frames create patterns that the average don't see. So my secret weapon for day trading is the 3 minute.
Oh, okay.
I don't know anybody who trades the 3 minute.
Yeah.
Everyone trades the 1 minute or the 5 minute,
Mm-hmm.
and this is right in between. It's an odd number, and I see patterns that those other two chart time frames don't really see. And the thing is, if you're trading, if everyone sees that chart pattern, it's usually going to fail. Unless it's a high momentum move early in the morning, it'll have follow through. But if it's blatantly obvious to everyone, it usually doesn't play out. So your 65 minute is odd. My 3 minute is odd. We're trading these funky numbers where we're trading patterns that other people don't see. And 1 minute is a bit too aggressive day trading for me. I don't want to trade that fast. 5 minutes a little painful and slow. The 3 minute gives me like that nice interval of here's a nice trade. I'm in it for 12 minutes or 45 minutes versus, a couple minutes tops on a minute chart. So, I mean, to me, the key takeaway, and this is what I love about technical analysis, everyone's got their sweet spot and their way their brain sees the market. You're 65 minute, I'm 3 minute for day trading. It's cool stuff. I mean, I love it.
Without a doubt. I got to that one because I started on daily charts, and the options, they move way faster, as you know, than just regular ETFs, right? The options pricing on them. And I was just losing on the day chart, and I'm like, this sucks. I don't like this. So I went down, I think, to like the 2 hour chart, and it still wasn't working for me. And then I went to the 1 hour chart, and I saw Brian Shannon. He's the VWAP trader. He was talking about don't ever use the 1 hour chart because the day is not 1 hour long. It's like 6.5 hours long. So you need to get a interval of that. And I was like, okay, that makes a lot of sense because one of those bars is a 30-minute bar that has equal weight to all the other 1 hour bars.
Yep.
And so I was like, all right, I can do a 65-minute chart. That's right around an hour anyway. And that's worked really well for me. Who knew, right?
Yeah, my main trading strategy for swing trading, I run everything off a 30-minute because they all have to have equal weighting. That's the way I see it. And a lot of people don't trade the 30-minute. I mean, not that I know of. Yeah. I mean, so it's tidbits like this that, over time you kind of find these sweet spots. And anyway, it's exciting stuff.
Yeah, this has been really great, Chris. I want to make sure that we get on the calendar to do this again. So really, thank you really so much for coming on and sharing all your wisdom with the audience out there. This has been really great.
Yeah, well, thanks for having me, Chris. Appreciate it.
Absolutely. And thank you guys for tuning in to today's How to Trade Stocks and Options podcast. Actually, I'm going to break script real quick. This is something I was telling Chris earlier is I love these podcasts because it's like two people having a conversation, and then we get to basically have the audience out there be a fly on the wall and pick up some nuggets that we're putting down. So this was a perfect episode for that. So make sure you guys tune in for more tools, tips, and tricks to help you trade faster and trade smarter. And I'll see you on the next episode.
Hey, thank you so much for listening. And before you go, remember to head on over to finclub.ai to get your 2 free weeks of artificial intelligence stock picks. You've got nothing to lose and only the most advanced AI to help you trade with confidence at finclub.ai. That's finclub.ai. 10MinuteStockTrader.com content is for information and educational purposes only. It is not, nor is it intended to be, trading or investment advice or recommendation that any security, futures contract, options contract, transaction, or other financial instrument or strategy is suitable for any person. Trading securities can involve high risk and the potential for total loss of any funds invested. 10MinuteStockTrader.com and Christopher Uhl, through its content, financial programming, or otherwise, does not provide investment or financial advice or make investment recommendations. Investment information provided may not be suitable for all investors and is provided without respect to the individual investors and audience's financial sophistication, financial situation, investing time horizon, or risk tolerance. 10MinuteStockTrader.com and Christopher Uhl are not in the business of trading securities trades, nor does it direct client commodity accounts or give commodity trading advice, tailored to any particular client situation or investment objectives. 10MinuteStockTrader.com and Christopher Uhl are not licensed financial advisors, registered investment advisors, or registered broker-dealers. Stocks, options, futures options, and other financial instruments not included here involve risk and are not suitable for all investors. You alone are responsible for making your investment and financial trading decisions, and for evaluating the merits and risks associated with the use of any financial security and broker platform. For more information, please visit 10MinuteStockTrader.com/legal. And thanks for stopping by.